Marco Santarelli of Narada Real Estate is the foremost expert in getting your money to work for you. At Narada, most people do not have the time to invest or do the work it takes to grow their wealth. Marco and his team will handle it. Working in 16 markets nationwide, Marco and his team will help set up a strategy to take you through step-by-step how to invest your money the right way and get you earning 8% returns from day one. If you need financing, we have it handled. The inspection for your property, if you need titles done, we have it handled. This is a one-stop shop to get you involved in the real estate game. Narada Real Estate and Marco Santarelli will ensure that you have what you need to start investing the right way. To learn more, visit naradarealestate.com. That's naradarealestate.com.
Hey, welcome to the Cardone Zone. Every Monday, Grant Cardone comes to you in the Cardone Zone to bring to you real estate investing made simple. Every Monday, every week of the year, I come to you because I'm going to tell you, folks, if you're tuning in right now on iTunes or YouTube or Facebook or wherever you are watching this or listening to this from, real estate will be the greatest single decision you make for your family. Listen to what I'm saying to you. Investing in cash flow producing real estate will be the most important single investment, financial investment you make in your lifetime. Second only to investing in yourself and your health and your spiritual wellness and your well-being, your mental expansion. Look, when you take money, cash money, which is going down in value, okay? We know that goes down in value. There's nobody watching this that says cash. By the way, cash is not king. Cash is going down in value. Kings don't want to go down in value. Cash is not king. Listen to what I'm telling you. We do this show for free, by the way. This is your education on real estate. You want to buy a course, you want to buy a book, you can, but I will give you more information here on Mondays. Make sure you subscribe so you can get notified that I'm dropping a show in, because today I'm going to talk to you about leverage and real estate. Why is it real? Because you can drive it, you can walk it, you can touch the people. Why would I want cash in the bank going down in value? No one would disagree it's not going down in value right there, okay, as opposed to an asset that will go up in value, assuming that asset is in the right location and provides cash flow. Listen to what this thing has to do. It has to have the loc, and it's got to have the cash flow. Cash flow is king as long as location is good, okay? So this is what I do. I take my cash that's going down in value that I earn from my main business, from work. This is my primary cash, job. I'm a CEO of a company. They pay me a salary, okay? So I got a job. Natalie's got a job. She earns money. Anything she can get above that. I'm a CEO of a company. I get money for a salary. Anything I can get above that, I'm going to invest either in myself, asset. I am an asset. I have an asset. I am an asset. Most valuable asset. I move around. I'm mobile. I have ideas. I can work. I can push. I can shove. I'm a very, very strong asset. That's why I want to invest in myself. I want to make myself stronger. I want to make myself faster. I want to make myself more positive. I want to come up with more solutions. Second thing I could invest in is, one is me, two is my business. Okay, what business is that? This business that produced number one and number two. I would want to put more money into if I'm a camera person, a photographer, I'd want to buy camera goods. I'd want to buy a course, an education course on how to be a better photographer. Maybe I need lights. The third thing though, when you start producing money outside, above what you need to live and take care of yourself and improve yourself and your business, all that stuff is going into something real. For instance, I'll give you an example. Most of you know that I own 5,000 apartments. Cardone Capital was created. By the way, we should do another show on this. Captain Ryan here, real estate Ryan, is with me today. I created Cardone Capital to challenge the fund rise. What are these other things, because people are like, how is Cardone Capital similar to Fundrise or REITs? What's some of the other names?
So
Yield Street?
Yeah, Fundrise, Yield Street, Crowd Street.
Yeah. Let me tell you how they're similar, and let me tell you how they're different. Okay. Number one, we pay every month. That's a different. Now, as long as there's cash flow, we pay every month. Most of the funds pay every quarter. Okay. So what you guys do is you guys look at something like, you look at the returns. Maybe a group's paying, 80-20. That means the investor gets 80 and they get 20, okay? Or you look at the points to manage. 1 point, 2 points. Most of these guys are charging 2 points to manage a deal. Is that right?
That's
1.5 to 2 points, okay? Now, what you're not looking at, and then they pay every quarter. So what we do, there's so many differences between what I do and what they do. A REIT, let's don't even have the conversation. A real estate investment trust is not invested in the asset. You have an investment in a piece of paper that's no more valuable than this, except somebody said it's worth $13 a share. Okay? It is not backed by real estate. That's the REIT. These other funds, the Fundrise, who else are they? So you guys can go shop this garbage.
Fundrise, Crowd Street.
Fundrise, Crowd Street, Yield Street,
da-da-da. Shares.
Yeah. They're gonna say they pay you an 80-20. They're gonna point your deal 2 points. We do a 65-35.
And the biggest difference, Grant, too, to mention is they're a REIT, so you're not a true partner with them.
Yeah.
You're just investing in paper, just to be clear with
Fundrise and Yield Street?
Yeah, Fundrise and Yield Street, they're REIT structures.
Yeah.
So you're a true partner.
You're a partner with me in the real estate. So they pay an 80-20. You look at my 65-35. This woman did a thing on how we compare to others. She's like, Mr. Cardone's a little more expensive. She's going to invest with us, by the way. But he's a little, because she believes in me. I said, he's a little more expensive because he does 65-35 and they do 80-20. We only do 1 point to manage the fund. They do 2 points to manage the fund. We pay out every month so you can get money every month. You know why they pay you every quarter? 2 reasons. The first one's not financial. They pay you every quarter so they hope you forget that you're invested in a fund and that you won't look at the value of the shares. They want you to forget. Listen. They want you to forget you're invested. I send you a check every month. Okay? The second reason they do it is because it is a financial distribution that is not in your favor. They sit on your money for basically 89 days without having to pay you. They're earning interest for 89 days and they pay you on the 90th day. Okay? Now, what we do also different than the finances, because finance is only one part of a real estate deal. The thing that matters in real estate, the thing that makes me different is this. The asset. I'm the picker, baby. Okay? You ever met somebody that couldn't pick a girlfriend or a boyfriend no matter what? If there's a freaking nutcase in the club, they're going to go straight to them, beeline, straight to the nutcase. How many of you know people like that? A beautiful chick or this gorgeous guy, and they have this disability where they always pick the freaking car wreck in the bar. Stay with me. I'm going to come back and show you how never to pick a bad deal in real estate and use leverage to get it.
Wealth Dynamics is an independent wealth creation firm. We have products and services that help you make money, keep money, and multiply money. You cannot build wealth without doing all 3 of these things. We save our clients 25% on debt, insurance, taxes, and investment fees, increase income by 30%, guarantee tax-free liquid savings with cash flow banking, and secure 8 to 10% fixed annual returns on your investments without Wall Street. On average, we can do this in the first 90 days of working with you. Simply schedule a free consultation with a wealth coach. Our services often cost you nothing more than what you're already spending. Go to wealthdynamics.com/contact to schedule your free consultation. When it comes to next generation telecommunications and setting up your business, there's no better company than Bullfrog. From setting up mobile office telecommunication technology to integrating with CRMs and call tracking, Bullfrog Communications has every service you need to handle, maintain, and expand your communication line with your customers. Upgrade your business phone right now. Let us help you grow your business with smart, easy, flexible, and efficient technology that gets your company on the road to better communication and next-generation business phone systems. To learn more, get a free quote at bullfrog.net. That's bullfrog.net. There's only one company to work for in the smart home industry, Skyline Security. Right now is looking for the best of the Grant Cardone following to join their team and expand financially and professionally. personally. Go to joinskyline.com to register. Labeled by Inc. 5000 as the fastest growing company for the last 2 years in a row, you get to protect families, grow your wealth, and join a team of top producers. Skyline is looking for great people. Go to joinskyline.com. That's joinskyline.com to get started on a brand new 10x career path. Go to joinskyline.com to register. To never have to worry about money again? Are you willing to put in the work to make your dreams come true? With my hands-on training, you can achieve real results selling high-ticket products online. I will show you how you can generate millions per year online. Learn how to build a $30 million business without wasting money on advertising or having to compete for traffic. You can start converting today. To get started, go to ecomexplosion.com. That's ecomexplosion.com.
Hey, welcome back to the Cardone Zone. Every Monday, I come to you to share with you how to get invested in real estate. Cardone Capital, we invest in assets that provide cash flow in great locations, okay? Why is that? Because that is what determines whether or not you have the super fourth leg of all real estate, which is appreciation, okay? By the way, you have to figure out this the debt piece, and I'm going to show you how to do that today in the show. But this is why you're invested in real estate right here. First reason is so you don't lose money. Why do I buy hard assets? Why do I buy assets? I buy assets so I take cash that's going down in value to put it in something that's going to go up in value. This is not going to be worth more money in the future. But a piece of land like what's behind me right there that has cash flow, asset with cash flow and good debt will appreciate over time as long as it's got a great location. For instance, I'll give you an example and then we're going to take some callers. 305-865-8668. I am the new owner of this office building. Okay? The guy that bought the building wanted $14,500,000 for the building. I paid him $13 million. Should I say this or not? I'll just keep this for the show. I paid the guy $13 million for the building, okay? Now, it took me a year to negotiate this haircut. I put him under contract at $14.5. He's probably watching right now. You know I got you, dog. I put him under contract at $14.5 a year ago, and we just closed the deal Friday at $13 million. Actually, $13.5. Yeah, you want to show? Yeah, show a picture. Okay? This will be, we need to Photoshop this. We need to put Cardone Capital flag in, dude. We need to put our name on the building, Francisco. We're going to paint it white, okay? I'm going to tarmac this. I'm going to get rid of that brush right up front, okay? Let me tell you how I bought the deal. Let me tell you why I ended up buying the deal, by the way. Okay, not only did I get what I think is, I overpaid for the deal. I overpaid for the deal, okay? That's what I'm telling you guys. You guys are like, hey man, how do I pay? I overpaid for the real estate. Why? Because the loco was good enough to go. The second thing that was good enough to do the deal was the deado. You know, Dave Ramsey says all debt is bad debt. I bought this deal because of the debt. I went to the bank and said, hey man, I used the debt to buy the deal.
And what did you have the value at? What do you mean you overpaid?
Well, $13 million, I overpaid for the deal. That's $13 million divided by 24,700 square feet. It's like $550 a square foot. It's more expensive than most of the offices around here. I'm not worried about it. First of all, the location is so ridiculous that I know in the future the next guy will overpay for it. I say this over and over. You guys are, buy low, sell high. No, buy great shit and sell for whatever you want to sell it for. People will pay for good stuff. If it's great, if Johnny's a good dude, people will give Johnny more money and not even know why. Because Johnny, ladies and gentlemen, is a great dude. Okay? So watch what I did with this deal. This deal went off at $13,500,000. I went to the bank and said, look, I got a tenant. I got a tenant that wants to pay $50 a square foot. Times 25,000 square feet. By the way, office is very similar to apartments. It's income, okay? It's like, oh man, I don't understand office. Income is income. Your business is only worth the amount of money that it produces, period. End of story. your business, your position, by the way, the position you have in a company is only as valuable as the money that it produces. We just hired a second pilot for our plane. Did we go ahead and put a deal out to him?
Yeah, we did.
I can only pay him so much money, okay? Okay, I can only pay a pilot so much to fly my plane. So we find out what the market's paying for somebody that flies a Gulfstream 550, and we say, hey, this is the money you're gonna get. But dude, that's it. Now Ryan could sit in the plane and start getting involved in the other parts of my business, okay? And all of a sudden he could have income that would be unbelievable. Dude, he'd fly the plane for free. He could fly the plane. He'd be like, I'm not going to charge you to fly the plane, dude. That's just my hobby. I'm going to fly a brand new Gulfstream for shits and giggles and just to hang out with Grant and go do real estate deals. He'll end up making millions of dollars as a pilot rather than 160 grand a year and never get paid to be a pilot. You understand what I'm saying? So why? Why? Because there's revenue, man. You guys got to get it, man. Cash flow is king. Mm-hmm. I had a guy here from Australia. He's like, hey, man, what kind of deal does Ryan get? We don't know. Ryan's not worried about the deal. He's worried about the flow. Baby, when the flow gets big enough, you're going to win. Right? So 50 times 25,000, how much is it?
1.25.
$1.25 million, okay? I went to the bank and said, look, the property's going to produce $1.2,500,000, okay? I need a loan. What kind of loan you want, Grant? Lend me all of it. And they did. That loan will cost me
$780,000.
$780,000.
That's at 6% at 13 mil.
P&I, with no money down. I got this tenant that's going to rent the place from me called Cardone Training Technology, Cardone University, Cardone Capital, and 10X Media Productions. They good. How good are they? They better than Sprint, better than AT&T, they better than Publix. You know why? Because I know somebody there. So the company pays the 1250, okay? I pay the 780, and we make 500 grand on no money down. That, my friends and gentlemen, ladies, is called leveraging your real estate. How to leverage your real estate. You can't leverage your business. It's dependent upon you. You can't leverage a calculator. It's only worth $4 or $5. It'll be worth 50 cents before it's over with. You won't even have these. They're going away. Nobody will, except if it had 10X on it, leverage your brand, okay? So that's what we're doing at Cardone Capital. We're leveraging 25 years of me buying real estate. I pick the deal. I find the deal. I get the best debt on the deal. I get the lowest interest rates available. I think we're paying 3.5% on this office building, okay? It's ridiculous, right? You're leveraging me and my real estate. I find the deal, buy the deal, negotiate the debt. I decide when we're selling it. And by the way, you are in the deal as my partner, shoulder to shoulder, without the responsibility, the headaches, the debt, signing on it, the obligation. And it's backed by real assets that go up in value over time and have a better chance of going up than your cash. When we come back, I'm going to take your call.
Based out of Jacksonville, Florida, this family-owned husband and wife team of realtors is there to serve you, track every process step by step, get you from contract into your new home or out of your current home sold and on the market. Chad and Sandy Newman will take you, market your home, and make sure that you will receive the best customer service ever. They're going to sell your property above market value in 30 days or less. With over 12 years of experience, this team is there for you. To learn more, go to chadandsandy.com. That's chadandsandy.com right now. Growing your future, protecting your past. J.D. Frost & Company, PLLC, is a public accounting firm. Offers a variety of assurance and tax services to businesses and individuals in the Chattanooga and surrounding areas. We focus on construction and manufacturing industries. Our primary objective is client satisfaction through excellent customer service. Work with the best. We are accredited by the BBB. This is J.D. Frost & Company for a full suite of tax assurance and management accounting services. Visit us right now at frostcpas.com. advert has captured your prospect's attention, the last thing you want is to lose the momentum of the sale. Maybe they fill out your web form. More likely, they'll leave, looking for online reviews or prices. Just like that, the moment has passed and you've lost your chance. That's why our trademark click-to-call ads let prospects call you right from within the ad. It takes just one click. Your ad can be placed across the entire web on any relevant website or any site your prospect goes once they leave your site. From Bloomberg.com to eBay, from MSN to Yahoo News, your ad can run anywhere. Instead of a normal banner ad, we display a video. Once you grab attention, a call button lets prospects phone straight through to your dealership. Don't leave your prospects hunting for a pen or trying to write down your dealership's phone number or switching apps while your ad plays. Make it easy for your customer to phone you. Let them simply click the call button and be instantly connected to your sales team. Go to rtb.cat and sign up for our banner upgrade request right now.
Hey, it's Ted McGrath with Message to Millions. Do you want to create a presentation online that actually gets clients? So I got something for you here. 26-point framework. If you want to do videos that sell, webinars that sell, I've tested this for the last 6 years in my business. I sold millions of dollars worth of products and services online. Click that link, grab the gift, tell me what you think about it, and I will see you soon inside the gift.
Grant Cardone back with you in the Cardone Zone. Real estate investing made simple. Again, cash flow, price, debt, appreciation. If you can figure out 4 of these pieces, the 4 legs of the table, cash flow. If it's got cash flow, you got a chance. 2, price. Did you pay a good price for the deal? Debt. How good's the debt? Everybody misses this debt thing. I got people talking about hard money loans over here, this loan over there. I'm like, I've never done a hard money loan in my life. I've never taken a hard money loan in my whole life. Would I? Maybe. And 4, how do I exit this deal and make appreciation? We're taking calls. We do this every Monday for you. Folks, you can do it yourself or you can do it with me. But either way, when you buy the right real estate, the right asset that provides cash flow, consistent cash flow, without over leveraging but using good debt, not bad debt. Number 4, if you're in the right location at the right time, you will most likely have appreciation in the future. And that's what we invest in at Cardone Capital. Whether you do it by yourself, you do it on your own, or you do it with Cardone Capital, I promise you your family will thank you in the future for investing in real estate. Let's talk to our callers. Dallas in Miami must be confusing.
How are you doing, Grant?
What's up, Big D? What's going on, player?
I have a deal for you.
Tell me about it. Tell me about it.
On it. Yeah, so, and I know this is something that you don't necessarily suggest, but it's something that I got in originally, which is development. And I have investors where we were able to, our portfolio includes cash flow positive properties, and had an opportunity to develop a 4-story building, and we're just around the corner of actually building the building itself. And just want to get your opinion on the numbers, and also whether it makes sense to not get debt right away with the raising interest rate, wait until it makes sense to.
Give me the deal. Give me the deal.
Okay, so it's the property itself. It's going to have 15 bedrooms, 6 units, 15 bedrooms each, or 15 bedrooms total.
Yeah.
It's on near a college campus, and the bottom level has a commercial space. So total gross income would be about $210,000
a month.
So a year, $210,000 a year.
Yeah.
You knew that.
Dude, don't do it.
Tell me about it.
Do not do this deal.
What are your
do
thoughts?
not do this deal, okay? It produces $18,000 a month. I mean, there's just nothing here, bro. There's nothing here, okay? It's going to cost you $9,000 a month to operate it. You end up with $9,000 maybe before debt, okay? There's no reason to do this deal, bro. Add a 0 to this deal and go look at it. Don't do little deals, folks, okay? This is not the dollar store. Don't do this. You're going to get killed, bro. There's not going to be a swimming pool. There's not going to be security. There's not going to be drop-off from Amazon. You're going to be competing with me in big deals, and I'm going to crush you.
And let me ask you this: when it comes to debt,
the retail portion of this, makes it even a worse idea.
Okay, and when it comes to, do you think that no matter what the environment is, it's always good to get debt, even if with raising interest rates, whether it's 5%, 6%, 7%, as interest rates rise, or if they do rise, do you think it's always good to get debt?
Well, I think it's good to get debt if you get good debt. You know, I think if you get bad debt, it's a bad thing. If you got a bad deal, it doesn't matter. You start with the deal.
Sure.
Number one, you start with the deal. The deal is senior. Like, it doesn't matter how good the price is, the cap rate is, the debt is. If the deal's no good, that's the problem with Yield Street, Crowd Street, the REITs. You guys are buying garbage. The asset is senior. This is the number one most important thing, dude. I would rather have 10% of a great asset than 100% of a piece of garbage. I definitely don't want 50% of something that's 50%. I don't want 50% of average. It's nothing. It's just a headache. I can line up investors all the way out the front door here telling you about bad deals. You know, that's the problem with everybody hears about the good deals somebody was involved in. So my deals are either good, great, or exceptional because I don't pick bad deals. So like all deals are not created equal. Ford Motor Company, you know, you look at the stock market's up 9,000 points. Ford Motor Company has been at a $10 stock, $11 stock for 7 or 8 years now. It hadn't moved one bit. Okay, went to 16, fell apart, went to 9, went back to 11. You don't hear about this. Twitter stock was $85. I think it was $160 at one time. It went down to $10. Snapchat opens up at $34. It's at freaking $9 or $11 today. Bitcoin, oh yeah, what happened to the bit? Boy, y'all took a bite out of a lot of people's shit, right? So again, buy assets that produce cash flow. Your 15 bedrooms, your 6 units. The reason somebody's figuring out how to get 6 units to be 15 bedrooms because 6 units don't do anything.
Sure. Do you find people getting in trouble when they go and find debt?
Yeah, I think you guys go into trouble finding debt because, one, your deal's not big enough to get good debt. See, this is the big secret nobody tells you guys. The deck is stacked against the little guy. But I got to start somewhere. Don't start little. It's suicide. If you're going to do the little thing, don't do it. Start with research. Shop deals. 3 years, I shopped deals and didn't buy a deal. For 3 years, I'm just giving you the advice I did, okay? For 3 years, I did not buy a deal. What I did was I invested my time, my energy, and my money in looking at deals. These deals, okay? So I look at deals. I study deals. Okay, why does this deal work? Why doesn't it work? What price would it work at? I watch the deal in the marketplace. Oh, what did it sell at? Oh, wow, man, I missed one. Maybe I didn't know. Maybe I need to give it another 2 or 3 years and find out whether it goes back to the bank or not. Real estate does go back to banks. And some guy like me will end up buying it. Don't buy bad deals. Okay? All of you out there you want to be invested in real estate, great, but don't buy bad deals. And small is a bad deal in real estate, please. Small is a bad deal. Diego, what's going on, Diego, in Toronto?
Oh my goodness, Uncle G. Today's a tremendous day. How you doing?
Man, it's good, dude. It's good. What you buying? You got a deal or you got a question?
So I got a question. So
Yeah.
here's my question. I have a 4-bedroom house in Pueblo, Colorado, and I bought it 2 years ago for $130,000. So right now, it's worth $161,000. So my question to you was, is it worth selling it now and then using that money that I get back to invest it with you?
Yes.
In your
Yes. Yes. You should do that. That is the best thing you could possibly do. And rent your house. Okay. Give me your house. How much is your house worth?
$158 to $161. That's
Okay,
what,
good. 158. What do you owe on it? 135?
No. I paid it down to 114.
Okay, good. So 114. So dude, get your $44,000 and get it invested. And go rent for $1,500 a month. Don't worry about it, man. And by the way, when you rent, make sure one of your offices, 200 or 300 square feet of your apartment is for office space only, and write it off. See if you can write that off, man. So, bro, you do not need to own a home. You need to own real estate that produces income.
So here's another one. So I used the VA loan because I was in the Navy for 4 years.
You use the VA loan because, hey, listen
down.
to me. You use the VA loan like so many other people did because it's a sucker's game, okay? It was put together to pull people in, man. Hey, man, a VA loan, man, you get like 1% down.
0 down.
0 down, no money down, man, just the application fee. It's a sucker's loan, bro. It's a trap, okay? Millions of people went for it. Hundreds of millions of people went for own your own home, only 3% down. It's a trap. If it doesn't produce cash flow, it is not an asset, it is a liability. The real estate needs to be, number one, the asset. Number two, the asset. Number three, the asset. When I buy stuff, I don't worry about the cap rate, the income, cash flow, debt. I worry about one thing the whole time. Do I want this asset? It's what keeps me out of trouble. It's what keeps me from overpaying for a deal and what keeps me willing to overpay for some deals. Because if the asset is good enough, I can overpay. If the asset is garbage, you don't want to own it at any price. Man, I'm telling you, I know real estate out there. If you gave it to me, I'd be like, I don't want it. Okay, so HUD loan, no, not HUD loan. What do you say? VA loans? Run! Single family home loans. Run as fast as you can. This is what Dave Ramsey was saying when he says bad debt. Avoid bad debt. It's terrible debt. It's slavery debt. I don't care how low the interest rate is, 4%, 3%, 2%. You're trapped. You do not want to be trapped at an address. I want to be able to move my family wherever and have income. Okay, that's the ideal situation. I could go live on a boat for 3 months in Greece, on a yacht, in the Mediterranean, and still get my checks. I don't have to push on my business. I don't have to show up in my office, okay? Why do I buy this office building, okay? Because the office building is going to produce $1,200,000 worth of income, and it's going to cost me $700,000 of debt, and it's going to make me $500,000. That means I got a tenant that's going to pay me $40,000 a month to show up here.
And you have 0 money in the deal.
And I got no money in the deal. But look, that game, for you guys to play that game, you're never going to get that deal if the bank looks at your balance sheet and says, okay, you got a house.
You're negative.
The bank looked at my balance sheet and says, where's your house out? I rent, dude. Man, your balance sheet is sick, bro. Sick. Sick being a good thing. That's SIC, right? It's, oh, my God. Oh, look at the cash flow you generate. All you see, man, you don't see any liabilities with me. See, I lease a car. Company pays for it. Okay? I produce cash, man. I produce cash. Guys need to produce cash. You don't want to be wandering off to some 2-unit, 6-bedroom deal, 6-unit deal with 15 bedrooms, chasing freaking bed bugs. Okay, by the way, it could be brand new and have bed bugs.
Right.
Johnny brought them home with him. Okay, next call.
Nathan in New Jersey.
Ain't nothing wrong with some bed bugs either, by the way. Keep the weekend interesting. Nasty. What about that stuff in the hair? What's that called?
Lice.
Huh?
It's called
Okay.
lice.
Okay.
Lice,
Hey, you got a
lice,
deal?
baby.
Do you have a deal, or do you have? See, like a golf course. I would never want to own a golf course. You know why? Because I got to order it. It's just tough, man. Okay. Cash flow. I want some cash flow. By the way, in the future, you know, people might be going to more Top Golf than they're going to golf courses. People might start playing virtual golf more than home golf. If they make those virtual golf things set up good enough. I remember when we played up in Colorado, I was like, man, that thing started feeling like I was actually on the course. Okay, let's talk to him. Nathan, what's going on, Nathan?
Grant, I just wanted to tell you thank you so much before I ask you the question. I believe you're a gift from God that He gave us because you're doing great inspiration to us, and we've been listening to you a long time, and reading your books and getting really inspired, and I follow you. And I really appreciate it.
Thank you so much. And by the way, I was sent here from God. By the way, I totally believe that. I totally believe my message is
You're a great
divine
gift.
and spiritual.
You're doing a lot of good stuff for us.
Yeah.
Yep, me too.
Yeah, he probably doesn't like the way I deliver my message. It's not like I'm Jerry Falwell or anything.
Sure he does.
Yes. You really deliver a lot of great content, and you're motivating us very much. I was focusing until now on small multifamilies, and I've listened to your podcast, and I got to know that you're right. We got to focus on big ones, and we got to look on smaller cap rates. I was trying to focus on 8 cap rates, and now I see the 6 cap rate would make a lot of sense to consider.
I saved
those
this guy
as
a fortune right here.
My question is, if I follow your step and I'm just getting a 6 cap rate, I would finance it the way you advised, with getting maybe a 70% financed with just the interest rate, without any other stuff going on, just interest. But I'm looking on the numbers. It looks like I'm just going to get a cash on cash 10%. I believe in order to scale and go big, I got to bring in other people's money as well.
Yeah.
And my investors would look to get at least a 10% return on their money.
Yeah.
So how do I?
Good. So I love your deal. By the way, this guy has said, this dude he's totally down the middle of the fairway now. He's looking for a 70% loan to value, 6 cap, 10% cash on cash. His issue is, how do I get the money? Okay, this is what I would do if I were you, bro. I would go get the investors. How big was his deal? Does he have a deal?
No.
Does he actually have a
No,
deal?
I'm looking on a 20-unit deal.
Yeah, how much is that 20-unit deal going to be, you think?
$3 million.
Okay, good. So this is what I would do with your $3 million deal. If I didn't have any money down, if I was starting all over right now, this is what I would do with the deal. I would go borrow $2.1 million because I know I can get the loan on that deal. If this deal's a 6 cap, like you said. 6 cap means what? It means it would earn $180,000 a year. NOI, the cap rate. The NOI, if I didn't have any debt, would earn $180 a year. Less my debt, there would be a cash flow. Okay, but let me just walk through the deal. This is what I would do. Okay, I would find somebody with $900,000. And I wouldn't make them a partner in the deal. I would just give them a percentage. I would pay the bank over here about 5%, and I would pay these people like 12 and not give up any piece of the deal. I'd pay all my cash flow out and keep my deal. We don't do that at Cardone Capital. At Cardone Capital, we make you an investor in the cash flow and the upside. But if I was starting over new and I'm trying to grind out deals, I wouldn't give anybody any part of my deals. Okay? You guys don't understand this, but when I give you a piece of one of my deals, I am literally giving you money. I buy these deals with my own money. Do you understand? I'm looking at a deal right now. It's a $168 million deal. I'll give you another deal. $92,500,000. I'm going to write a check for $30 million. That's not your money. That's my money. I'm going to sign the loan for $62,500,000. Then Cardone Capital is going to come back in and raise money. Not raise money, because the money's already raised. We don't raise money, dude. We just back what we call backfill, for lack of better terminology. We need to come up with a different name. It's not backfilling. I'm giving people, I'm giving you my shares. I let you buy shares I already bought. So if I already bought the deal, how did I feel about the deal? Pretty good. I didn't raise any money. World goes to hell, internet shuts down, Cardone Capital gets dissolved, whatever. Dude, I bought the deal. I still own the asset. No investors come in. How do I feel about the deal? What all these other syndicators do? They go raise the money and then buy the deal. That's who I'm bidding against every day. I got this deal because the group that was going to buy it against me didn't have the money yet. They got to go raise the money to buy the deal. I buy the deal because I got big freaking cojones. Not really. I love the deal. I drove it this weekend. I love this deal. I drove another deal like it, similar to it, down the street from it. I hated it. Ain't going to buy it. So I got to look at a bunch of deals to know which one I'm going to put my money in. It's called put your money where your mouth is. And then I lay all my money not where my mouth is, but where the address is good. So I would tell you to do this, dude. I'd pay the bank the 5%, and I'd go to your mom, your dad, your uncle, your aunt, and say, hey, look, I'll pay you 12% on the $900,000. Well, how much of the deal do I get? You get none of the deal. I get the deal. You get a great 12% loan. By the way, they're earning 0.0012% now. You're paying them 100 times. 100 times the interest rate. You just got to learn how to sell now. Okay? And then what I would do is I'd bust my ass to make sure this thing cash flowed. So I need 2.1 million. How much is that at 5%?
2.1.
Let's say that's $147,000.
Huh? 105.
Okay. And then interest only? No, you need to add 2. Okay. Add 2 to the calculation. And I'm going to pay these people 12% interest only, though.
108.
On the 900? Mm-hmm. Interest only, so that's 108. Okay, watch what I'm going to do.
And then 2.1 times 7%.
Yeah.
Is 147.
147 and 108.
Plus 108.
So watch what happens. 15, 5, 255. And if I have a 10%
cash on cash, which is out of the 900.
300 grand, right? Less than 255. He's going to make $45,000 a year with no money down and control the asset. Before he raises the rents, 20 units. If he can raise the rents $50, he makes another $12,000 a year. Now he makes. See, that's the way I would do the deal. I wouldn't give anybody anything, man. I'm giving people pieces of my real estate because my big play is going to do this. I'm going to accumulate a massive, massive portfolio of real estate, and then I'm going to go to Wall Street and sell it to the boys in New York. Mm-hmm. And I'm going to make a bunch of people rich in the process. And keep you guys from these bullshit baby deals that you're looking at right now where you thought you were going to club a baby seal and the next thing you get eaten by a damn great white. Called the bank. They're going to eat y'all's ass up, man, I'm telling you. We're at the height of real estate prices right now. When this thing falls apart again, and it will flatten out, it will get ugly, we will have a problem, something will happen. Let me tell you what's going back to the bank. Single family homes, duplexes, quads, eightplexes, they're going back, bro. They're going back. They're going to pull back. You're going to get hammered again.
All right. We got David in Knoxville.
David, you better have a good one for me, bro. I need a deal. By the way, if I was 28 years old, I might be doing that. Mm-hmm. You better learn how to sell, though, son. Put your selling shoes on, boy. Because your parents, man, your parents, uncles, aunts, the people close to you that got the 900 grand, you got 9 people that can give you 100 grand.
They're terrified.
The problem is the 9 people you know are stupid.
And they're terrified.
And they're terrified.
And they've seen their brother, mother, uncle.
Yeah, they just remember you masturbating in the bathroom when you were 12 years old. They're like, I ain't giving him it.
I had to clean up after that bastard.
Did I say that?
You did, but it wasn't weird. No eye contact for like 30 seconds. Johnny?
Caller.
Is that Eric?
David, what's up?
Oh, Derek?
David, what's up?
Uncle G, what's going on, man?
Come on, my little Neff. What's happening, baby?
Who's got my money, baby?
Baby, I got some of it. What you got? You got a deal or you got a question?
I do. I've got a deal real quick. Just got turned on to you and all your material, your goods, man, in the last few months. Outstanding stuff and learned a lot. Got a quick deal. I'll throw it at you quick.
Throw it at me, dog. Hey, by the way, you coming to my boot camp?
Man, I was in Marco Island. I was the guy I kept harassing you for those last 2 tickets for dinner. But I can't make the boot camp.
Okay.
But I'll be hooking up with you soon. There's no doubt.
Okay, awesome, man. Awesome.
Quick deal. 24 units. $1,750,000 purchase price. Paying a little bit, what I would consider over market value for the property. Location is outstanding.
What's the address?
Seller will carry the note, carry the paper. I know the guy. I've done a couple of deals with him. Trust him.
Yeah. Why do you say it's why do you say it's overpriced, man? It looks like 60 grand a door. Or?
Well, just for my area. And when I say it's overpriced, I mean we're not talking about much at all. But
yes, 70 grand a door.
Specifically for that area, it's right there at the top shelf, maybe just a little bit hair over.
Okay.
So, but at any rate, location is great. That's what intrigues me about the deal. The other thing that intrigues me, and this is what I want to know what your opinion is, I don't have that 30 or 40% to throw at it.
Yeah, good.
The guy will do it he'll do it for $100,000 down, which I have. 5.5% interest. My goal is to hook the deal. He wants it at 5.5 amortized on 15 years, so that's the stroke I got to pay him on a 15-year note. and it balloons in 5 years. My goal is to refinance him after 5 years.
Okay, quit talking. Let me tell you. Tell me the income on the deal.
It is $17,000 a month, $201,600 a year.
$201,600 a year.
That's correct.
Okay, good. So this is the way I'm going to do this deal. By the way, I love this deal. I'll just tell you right now, I love the deal, okay? I wouldn't even talk to him about the price. Price has nothing to do with this deal. What I like most about it is 24. I always say, man, 32, I would make an exception. I'm consistent. I would make an exception to the 32. This 24 is just big enough. Now we're at a size. But because he doesn't have to put money down, he's got a guy that wants to sell. Why does he want to sell? Because he's tired of the damn thing, okay? What I would do, though, is I wouldn't put a purchase together. I would put a lease option on this deal so that he doesn't have a tax event until 5 years from now. If he sells to you and holds the debt, he will have a tax event immediately. He's not exchanging it. I know the guy's not exchanging the property because he's not getting enough cash from you. Okay? So, David, this is what I would do. I'd say, hey, bro, we'll trade paper when I buy the loan off. Okay? This is what I would do. 1,750. I love this deal, man. Times 0.055. Interest only. I would pay him interest only on the debt. All right? He's got 24 units. He's got 201,000. He's not going to care, by the way, on the interest only. Mm-hmm. He doesn't want to manage the deal. What is that? 96,000
on 5.5%.
Okay. Yeah, I think you're going to be able to manage this thing for about 80,000 a year. Does that sound right, David?
That's correct.
Okay. 121. You're going to pay him $96,000 a year in interest. Okay.
24,750.
$25,000, something like that. Mm-hmm. Okay. And then your job is to go take those 20 units and get another $100.
What is that, 20?
Because that'd be another 24 grand a year, bro.
Mm-hmm. So you put 100 grand down.
You put 100 grand down. 25. You made 25,000 a year. That's 25% return. I would buy this deal today if I was where you are. Mm-hmm. I would pay him interest only for 5 years. Interest only. Give him the 100. Interest only. But I would not transact on the deal. Let me tell you why. If you don't transact on the deal, your taxes going forward will be the same as his current tax basis. What city is this in?
Knoxville, Tennessee.
Yeah, dude, do not transact on this deal until you want to. Okay? Now, when you're going to transact on the deal, do you understand what I'm saying right now?
I do.
So when you transact on the deal, what happens is it's going to record out at 1,750. His tax basis is probably 400 grand on this deal. So you want your taxes to be at the 400 grand because if your taxes are one of the most expensive things in running a piece of real estate, is what Nashville or Knoxville is going to charge you in taxes. So the trick here is to keep these expenses down. So I'd put a contract together for him. Hey, in 2005, what is that? 24. I have to buy the property from you. We transact then or before. Okay? And you're going to tell him, he's going to love this, by the way. He's going to be like, this dude's thinking, man. I like a savvy guy. Give him his 100, put a lease option. He has to sell it to you. Okay? The 100 applies to the 1,750. Any of you have any questions about what I'm telling him right now, you can post in comments. I know some of you are so smart out there, you're going to find some kind of glitch with the deal because you know everything about nothing. Okay? So I would put the 100 down. Let me tell you what I want to do with this deal. I want you to get another. This is your NOI right here. Okay? See this NOI? Is that the NOI? No. NOI is 201. The 201 NOI, I want to see if you can add 50,000 to it.
The 201's the gross.
Oh, I'm sorry, 201. Okay, so the 121.
That's right. Yeah, that's right.
Huh? Yeah, the 121's your NOI. I'm sorry. Okay, I want to see if you can add $24,000 to the NOI because watch what happens with the deal. Because then you're going to go to the bank and get a new loan and take this guy out with no money. Watch what happens.
It's 145.
divided by 0.06. What'd you pay for it?
$1,750,000.
Yeah, the bank's going to give you a loan for $2,410,000. You're going to get all your money out and some. Let me see if I did that right. I don't think I did it right though. Hold on. 121 plus. That's his current NOI. Okay. All I want him to do is add.
You were just doing the valuation on a 6 cap, correct?
I want him to add $500 a month. Yeah, $500 a month. 12,000. Just add 12,000. Let's see. 121, and you think you can add $1,000 a month there per unit?
I don't, Grant.
Yeah. How many units?
24.
No. Hold on a second. Whoa. I can add $1,200 a month.
$1,200 a month.
$50 a door. $50 a door.
That's $14,000. Okay. So let's go back to $14,000.
Okay.
Okay, that's 135. What's it worth, Ryan? 135 divided by
135 divided by 6% is 2.25.
Okay, so now the building's worth 2.2 million, 50,000 to the bank. That's how the bank's going to evaluate it.
And then 75% of that is 1.687.
Yeah, they're going to give you a loan for 1.687.
87.
What'd you pay for it? 1,750?
$1,750,000.
Yeah, I mean.
So, but you still control 24 units for $100,000. It's less than 5% down. It's
Yeah. So, you know.
Long-term debt.
Either way, I like the deal. I was hoping to be a little bigger score than that, but look, good things happen. When you buy a piece of real estate where the location is outstanding, good things happen that you underestimate. So.
In just in simple terms, I would put $100,000 to control 24 units.
I give you $100,000 to control 24 units. Look, I got people investing in Cardone Capital. They give me $100,000. They're in a deal that's $168 million. It's like this doesn't happen. Like typically with $100,000, you get garbage.
Right.
Okay. So I love this deal. I love it, Dave. You got any other questions?
That's it, man.
Best call of the day, dude. Let's get this guy something. Let's get this guy something because that was the best call of the day. Send him something, a millionaire booklet or something. My name's Grant Cardone. This is Cardone Zone every Monday. Whether you're listening on iTunes, you're watching on Facebook, you're looking at it on YouTube, post your comments below.
New book.
Subscribe, okay? Subscribe and review wherever you is. I'll send you my new book and ebook, my new book, How to Create Wealth in Real Estate. I'll just send you what we're work in progress. I'll send it to you via your email. Just subscribe to wherever you are watching. Review the channel. It's freaking extreme intelligence. And I'll send you the book for free. By the way, we got a boot camp coming up in 20 days. We're going to be talking about everything from sales, marketing, promotion, advertising, branding, how to increase your income, how to 10x your business. We'll be talking about real estate. We got a dinner. We got lunches. 3 days with me right here in Miami to talk everything 10x your business. It's at GrantCardoneBootcamp.com, GrantCardoneBootcamp.com. I think we got 50 seats left. Love to have you there. Bring your spouse. Bring your spouse.
Hey, Jared.
What else? What else we got? Cardone Capital, CardoneCapital.com. We're taking investors right now. We got 2 monster deals about to be announced. The fund is wide open and ready for your investment. If you love the idea of investing in real estate, if you've always wanted to invest in real estate, okay, if you like the idea of having your money in assets that produce cash flow, we maximize leverage, we maximize cash flow, and we get appreciation long term. If you like that, your money, your cash, being in cash flow producing assets, but don't have the time, have always wanted to do it, can't find the deals, can't find the projects, can't find the financing, invest with us at Cardone Capital. I'll never let you down. I'll never let you down. I can't promise you that I'll be as successful in real estate going forward as I have been, but I can tell you I started with $350,000 that's worth about $800 million today. I don't know how that translates in return, but it's freaking stupid. Okay. Our first investment in real estate was $78,000. My next one was $350,000. Okay? Since that second deal, I've never lost money in a real estate transaction. Cash flow every month. There'll be some times where they don't cash flow, maybe for a period of 6 or 8 months where I go back and rehab the property. We use the cash flow to enhance the property. But I just know how to pick them, man. I'm telling you, I just got a gift. I got a gift to pick, okay? So look, if you want to invest with us, if you want to take care of your family's future, your family will thank you later. CardoneCapital.com, CardoneCapital.com. All of our funds have sold out. I know this one will sell out too. Love to have you involved. Thanks for watching today. See you tomorrow on Power Players.
This will be our third fund. It's a $40 million fund. So we're giving people a chance now to say, hey, I want to be involved in big, giant real estate deals that pay money. These are deals that are doing anywhere from 160 to 200% returns. You put $1 million into a deal and you're coming out with $2 to $3 million, but it's going to take 10 years. This is not get rich quick, okay? If you're taking notes, write this down. Don't do the get rich quick, man. Go for the get rich for sure. I don't need to get rich quick. I want to get rich for sure. So I'm going to go from 4,000 units. How many do you think I should go to? I'm going to go to 40,000 units. This is what I'm going to do, and this is why I'm going to do this. I'm going to go to 40,000 units, and I'm going to get the whole world involved in it. You're either going to invest with me, or you're going to actually help me raise these funds. Okay, so when you see me on social media talking about other stuff, anything that you see me talking about, what I'm doing is building an audience so I can allow people to get in a vehicle to where everybody gets rich. Because let me tell you something, if you want to make happy customers for life, make them money.